Faith asked the question, how does depreciating assets, investments annually through the income tax relate to capital gains tax? Actually, I mentioned that earlier in the slide, so I won't address that question. But the second part of Faith's question was, how is capital gains tax calculated on the sale of property that was inherited? Now, this is an interesting question. Now, if the asset was purchased, there's two main scenarios here. One is that the asset was purchased pre-CGT. So that's prior to the 20th of September 1985. Now, if it was pre-CGT and the owner of the asset died, so it's in their own name, for example, it's a pre-CGT asset, and they've died today on the 7th of September 2015. Now, how that works is that the asset is CGT free. If you then held on to the asset and you transferred ownership to the beneficiary as per the will, the value, and say the asset was bought for $100,000 and now it's currently worth $500,000, you inherit the asset at the cost or the valuation as at the date of death. So if the asset's worth $500,000 and you maintain the asset, then your cost base is $500,000. So it's kind of starts to be CGT applicable from the point in time that transfers into your name. That's one scenario. If it's post-CGT asset after 1985, so let's say it's bought in 1990 and it was bought for $100,000 and it's now worth $500,000, and the asset is not being sold but transferred into the beneficiary's name, then the CGT here, so the $400,000 capital gain, goes with the asset effectively. So you'll inherit the asset will move into your name, but your cost base is the $100,000, not the $500,000, if that makes sense. So this is where managing the capital gains tax now, if you can, does provide some value, because you might be able to have a low income tax rate, you might be able to get money into super to offset capital gains, etc. So in the post CGT purchased asset, then the cost base is assumed by the new beneficiary, so the new owner. So then if you sold the asset, say for example you held the asset for a year, it's then worth $600,000, then your capital gain is the difference between $100,000 and $600,000. So the capital gain is $500,000 in that particular scenario. I hope that helps there, Faith.